Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market. As you can see on the gold market, the last trading session of the 2015, we have the really minor action. So market just slightly has dropped lower, but this was really very shy trading session. Still, the major conclusion, guys, that we could make on the analysis of the gold market is that upward setup, bullish setup that has been formed 2 weeks ago, right now becomes blur and blur. So it's really, as it has started very well with this upward action, double repo has been confirmed, but in the recent action, guys, we see really some problem signs for bullish scenario. Also, it is interesting that this conclusion and this view generally corresponds to the analysis that we have made yesterday on the Forex market and now a view on the Forex market. So theoretically, based on the technical picture, we can't say that the bullish setup has failed totally. Theoretically, it's still valid, but the action that we see really points that this is just a question of time when this setup will fail. Because the action that we see right now on the gold market absolutely unnatural for normal bullish behavior. Even on the daily time frame chart, take a look what we have. First, we've got this confirmation of the double repo action has started. But right now, market suddenly has stopped. Usually double repo pattern leads to the explosive upward action because, in fact, this action down is the last challenge of the bears to push market through the previous lows. As soon as it has failed, usually bearish power destroyed, and here bulls taking the control over the market and push market high. That's why, in fact, when the bulls starting to push market high, here they have no barriers from the bears because bears have put all their power in this attempt to push market through the lows. Here, almost unlimited control of the bulls should follow and market should just skyrocket to the upside. This is usually how the double repo works. What we have instead of that, yes, it has started very nice, but then market has turned to some consolidation. Well, we said this is a general bullish consolidation, and take a look at the 3x3 moving average enveloped very well this action. Sometimes it happens when the market confirms double repo, then it turns with upon 3 sessions in some consolidation before the further acceleration. That happens sometimes. But this hasn't happened, so you can see that flag has been formed. Initially we said, well, it's more marble, maybe this is the preparation for the possible breakout. But later, market has moved below the 3x3 first, and then collapsed and has broken the flag in opposite direction. This is very bearish sign, especially on the background of confirmed double repo pattern. Second moment, guys. In the last session of the December, although it was not really strong, but take a look, trend has shifted bearish, the market has confirmed bearish trend. And finally, on the daily chart here, guys, we see the bearish dynamic pressure. Because take a look, market is forming lower tops, stands sideways, although trend has shifted bullish. So you can see trend holds bullish, but price action is not. It stands flat. That indicates the bearish dynamic pressure. Usually it leads to further move down. Acceleration down, and the minimum target of this pattern is these lows. So market should at least clear out these previous lows. Maybe it will continue to move lower. This is also possible. This is, guys, magically corresponds to the weekly chart. So recall our analysis when we said the market hasn't quite completed the 1038 target of the big weekly ABCD pattern. And we was a bit frustrated when we have seen this forming double repo buy pattern. When it starts to work and it has been confirmed, we say, well, it's a bit curious. Maybe, of course, market will return a bit down after it will complete this retracement. It's just action down will fall a bit later. But now we see that probably not. So currently this action is very logical and corresponds to the untouched weekly target. So that's all what we see on the daily chart. So it means that currently we should not take any long position, despite the fact that double repo theoretically is still valid because market hasn't closed below the 1060 area yet. But overall combination looks really dangerous for the bullish setup. On the 4-hour time frame chart, guys, we see another bearish signs that's not very pleasant to the bulls. So take a look. Recall our retracement. Initially, it has started very nice. It was very clear. This market has formed upward reversal swing. We said, guys, here we probably should get ABCD retracement down. This is because the rule of thumb, when after reversal swing, market usually shows the 2-leg retracement. It has started. Later, we have recognized here the 3 drive, and this was really a positive sign for the bulls because the 3 drive reversal pattern, and it could put the foundation for the upward action. But take a look what we see in the last 2 sessions. First of all, ABCD pattern has failed. It not quite failed, but market has dropped below its target. And it means that this market has passed through the 100% extension. It means that it should fall to the 1618 extension, to the lower target. Also, 3 drive has failed. So 3 drive should start action to the upside from the 1063 area, somewhere from this level. And also the last part of the 3 drive was a butterfly. Take a look. Butterfly hasn't failed. This market just has hit 1618 target right at the 618 support at 1060 fib level. But take a look at this acceleration down. This is very bad sign for the butterfly because butterfly is bullish reversal pattern. And when we see acceleration, such sort of acceleration right to the 1618 target, it usually tells that the butterfly will fail. If butterfly will fail, the 3 drive already has failed. So that's just probably temporal stop, temporal pause in the downward action. So take a look what market makers have done on the last trading session. If you take a look at the hourly chart, that was just very nicely looking wash and rinse. These lows when the market just grabs the stops that have been placed below this level and move up. That's why, guys, when we're dealing with a double repo pattern, we need to see the close below the 1060, and that's why we usually do not place stops right at this level because of possibility of this wash and rinse. So currently you can see wash and rinse has happened. Market grabs the stop and return right back up. So theoretically, market doesn't show the close below the 1060. It means that the double repo is still valid theoretically. But I think that it's not useful for us for any trading right now. We can't take the position right now based on this pattern. Even I would say even more that probably in the next week we will have to deal with double repo failure because this action that we see is not bullish. It's not typical for the bullish market. The patterns that we see here is not bullish. The behavior of the double repo pattern is not bullish. So I think that is too much for just occasion. We could write off, make the discount some these moments on the small insufficient liquidity before the Christmas. But I think that the appearing of the butterfly, appearing of the flag pattern should be enough. So market could just turn to some sideways action. But the action that it shows here, it's too much different bearish patterns to call it as the just occasion and to call it as and to treat as the reason for that the insufficient liquidity. I think that is some bigger background stance, larger background stance beyond this action. That's why, guys, our conclusion on the gold market that we should be ready for a downward continuation. Definitely, we should not take long position here. Depending on how situation will develop on Monday and Tuesday, we will think. If market will turn to the upside retracement, we will think maybe we will take the position here. I mean bearish position to the downside. If market will drop lower on Monday and will close below 1060, that will be much greater because in this case we will get the definite failure of the direct double repo, and we will simultaneously get the confirmation of the double repo failure pattern. And that in this case the patterns will be in place, and we will be able to start trading market on the bearish side. So that's our current view on the gold market. It becomes really interesting, and definitely will continue to follow it.